Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. Union Home Minister Amit Shah defends the Citizenship Amendment Act, says there is no question about rolling it back. The 38th meeting of the GST Council will take place today. Boosting revenue collection and possible rate changes are on the agenda. The centre has also hiked the monthly tax collection target to 1.1 lakh crore. India's telecom regulator defers the implementation of zero interconnect usage charges to January of 2021. IUC charges were earlier meant to be zero from January 2020. And state-run NBCC wins the bid for JP Infratech. 97.36% of the Committee of Creditors voted in favour of the resolution plan. And plastic pipes and fittings manufacturer Prince Pipes' 500 crore primary offer opens for subscription today. Let's talk about the US markets now. They ended Tuesday at fresh record highs, logging 5 straight days of gains. The euphoria of the US-China trade deal seems to be fizzling out, with benchmark indices ending off the day's highest point, but still managing to stay in the green. Renita Young of Bloomberg News wraps up Tuesday's Wall Street action in this report.
U.S. stocks were pretty steady for most of the day on Tuesday, but they ended slightly higher after U.S. manufacturing and construction data boosted investor sentiment. Yet the excitement from that partial U.S.-China trade deal is starting to fade a little bit. During the session, U.S. factory production last month beat expectations. Construction permits to build U.S. new homes rose to a 12-year high, and the revised U.S. GDP figure will come out on Friday, so we'll get a clearer picture of the U.S. economy. Meanwhile, Bed Bath & Beyond rose during the session as its recently appointed CEO shook things up a little bit in the management structure, with 6 executives departing. And 22nd Century Group, that's a plant biotech company that deals in low nicotine tobacco. Those shares rose as high as 46.6% after the U.S. Food and Drug Administration approved the company to sell 2 low nicotine cigarettes. And that's a look at your Wall Street action on Tuesday. In New York, I'm Renita Young for Bloomberg News.
So 0.1% gains or less for the 3 averages in the US. Let's take a look at the Asia Pacific region and see how it's faring as of now. I'm joined live by Rosalind Chin, who's joining us from the Bloomberg studios in Hong Kong. Rosalind, we're going to be talking about this in just a little bit. Some of the details of that US-China agreement are coming to light, and perhaps that's having a bearing on the markets as of now.
It does look like investors are taking a little bit of a step back as they wait for more details about these trade agreements to come out, and also after, of course, global equities rallying to close to record highs. A little bit of a breather is only to be expected, and also looking for a bit more direction today, some cues to help them keep going. So what we are seeing is, yes, a bit of fairly lackluster on the Asian markets today. In the MSCI Asia Pacific Index is in fact pretty much flat right now. Looking mixed if you look around the region. The Nikkei is making losses of about 0.25%, and the Topic's about the same amount. We did have some numbers out from Japan earlier on trade balance. We saw the exports dropping for a 12th straight month in November, down 7.9% year on year. Still less than the forecast drop of 8.9%, but still, adding to concerns that these little green shoots that we have seen perhaps of a turnaround have not yet taken hold. But this is, the longest streak of declines that we have seen in Japanese exports since 2016. Could indicate that there is a bit of a bottoming out there, because that number was not as bad as economists had forecast. So something to watch out there. We're also going to follow up on SanBio, that stock we mentioned yesterday. Now, this pharma stock is losing at 6.8% right now. This is after it lost more than 20% yesterday and 17% on Monday. So it's still extending those losses. This is after the company said more time was needed to produce its SB623 treatment, which is for traumatic brain injury, to January 2021. So that is taking a pretty bad hit on that information there. Hong Kong's Hang Seng Index is trading higher right now, up by about 1/3 of 1%. One interesting stock there actually is Dongfeng, that was suspended in Hong Kong from trade. That's possibly related to the merger agreement between PSA and Fiat Chrysler. PSA, of course, making Peugeot cars. Dongfeng has a 12% stake in PSA, and it's reported to be selling down some of its stake as part of this merger agreement between these two car makers in Europe. So that was something that we'll be watching out for as the day continues. And the S&P ASX 200 index, that is now making gains of about 1/10 of 1%. One to watch there is National Australia Bank, as it has its meeting, general meeting today. And right now, NAB or NAB is losing about 2/3 of 1%. Back to you.
Thanks so much for that, Rosalind. Now, Indian markets, meanwhile, I'm talking about the benchmarks, particularly the Nifty is going to be in focus today, having hit a record high yesterday, but we'll get to that in just a bit. For now, let's talk about the big story this week that came out over the weekend. That is the signing of the trade deal, the Phase 1 trade deal. More details are emerging from that Phase 1 trade deal between China and the US, where China plans to increase its imports from the US by as much as $200 billion over a 2-year period. The big question is, how does China plan to meet those commitments? Tom McKenzie of Bloomberg News has the answers.
A lot of skepticism, as you say, about these numbers. So $200 billion in total on top of the $184 billion in goods and services that China was buying from the US back in 2017. So you're looking at close to $400 billion in total goods and services that China apparently has committed to buying over a 2-year period. And you're absolutely right to say that part of that would be a commitment to buy between $40 and $50 billion worth of agricultural products. So what we're hearing now from sources in China, officials here, is they're looking to do this in one of a few ways. One is they're going to remove tariffs, apparently, on ethanol purchases from the US. Now, this was a fairly significant trade before the trade war kicked off. So back in 2016, China was buying about 200 million gallons of ethanol from the US. That effectively stopped on the back of the trade war when they slapped tariffs on. They're going to remove those tariffs, start importing more ethanol from the US. That's going to be part of it. But also, and this is interesting, they may look at rerouting some trade from Hong Kong to mainland China, which could increase the numbers by about $10 billion US. Now, of course, they are considering the impact, the economic impact on Hong Kong of any move to do that. So that hasn't been confirmed yet, but they are considering rerouting some of that $10 billion worth of trade from Hong Kong to the mainland as well to try and hit those numbers. Other things they're looking at doing is removing, or at least suspending waivers, suspending tariffs, I should say, waiving tariffs on things like soybeans as well as pork. We've seen them do that on chicken. Poultry imports from the US have now ticked up to China quite significantly. They're looking now to do that at soybeans and pork as well. And again, they have domestic needs to meet when it comes to ensuring that they have enough meat on the tables of Chinese homes. So there's a domestic dovetails with domestic agenda as well on that respect. So we're getting a bit more clarity in terms of how they hope to meet these numbers. But again, as you say, they are still very ambitious.
Meanwhile, in the US, House of Representatives is set for a vote today on 2 articles of impeachment against President Donald Trump. Adoption of the measures would make Trump the 3rd president in US history to be impeached and would be set up for a Senate trial in January. Joe Sobzik has more on this.
This is most likely to end as the other previous impeachments have ended, with acquittal in the Senate. It takes a 2/3 majority there, and Republicans have a majority as it is. Even if a few broke with the party and voted with Democrats to impeach Trump, it would not nearly be enough to convict him in there. So McConnell is trying to set a course for having a pretty rapid trial, something that can be wrapped up in a matter of a couple of weeks, perhaps, with just the arguments being made by the Democratic House impeachment managers, who essentially will be the prosecutors for the case. The president's counsel will be able to come in and deliver a defense argument, and then they would, under McConnell's plan, then they would decide on whether or not that other witnesses should be called. Democrats are pressing for some members of the administration who were not did not testify before the House impeachment inquiry to come in and give testimony in the Senate. But it looks, at least at this point, that Republicans will prevail in preventing that from happening.
Even though it appears the president will be acquitted by the Senate, Joe, the President Trump has still launched a blistering attack on Nancy Pelosi, hasn't he?
Right, and the entire impeachment process. It was a 5.5-page letter addressed to the House Speaker, calling the entire affair outrageous, irrational, and really ripping into both Pelosi and Democrats, repeating a lot of the arguments that he's been making over the past weeks on Twitter and at his rallies, and it was in fact quite a document in terms of the language he used and in terms of his denunciations of the process. He questioned whether or not Pelosi was sincere in saying that she prayed for him. He called the entire process dishonest and said that Democrats would pay a price at the polls in the November elections.
Well, we'll see soon enough. Tomorrow morning, we'll get you updates of what happens in the House of Representatives. For now, let's see what's making headlines across the globe. Jessica Summers of Bloomberg News brings you the first word headlines.
The House of Representatives has passed two giant spending bills, providing $1.4 trillion to fund the federal government through next September and avert a shutdown when current funding expires on Friday. The bills come after weeks of partisan talks and now head to the Senate, where they're expected to pass. The White House's President Trump will then sign them into law. The U.S. government is heading off calls by China and Russia to ease sanctions on North Korea, despite claims that Pyongyang has complied with UN resolutions. A proposal sent to the Security Council met pushback from Washington, with President Trump saying he'd, quote, take care of any threats Kim Jong-un has in the works. Beijing and Moscow say North Korea is at a critical situation and needs help. A Democratic-led House committee has moved the USMCA trade deal forward, sending the measure to a full House vote on Thursday. Overhauling NAFTA will give President Trump some much-needed political capital as he faces an impeachment hearing in the House later Wednesday. However, the Republican-led Senate won't take up the trade accord until the new year after the conclusion of the impeachment trial. And there are more signs that Hong Kong's economy is suffering under the impact of prolonged protests. Unemployment passed 3% last month, to the highest level since 2017, with an 8-year high of more than 6% in the food and beverage sector. Meanwhile, local airlines face job cuts and even bankruptcy as tourists stay away. In fact, Cathay Pacific reported a 4th straight monthly drop in passenger traffic. The former dictator Pervez Musharraf is the first military leader of Pakistan to face the death penalty after a 6-year treason case heard in absentia. The verdict is seen as a blow to the powerful armed forces and drew strong criticism from senior officers. Musharraf has lived in Dubai since 2016 and never attended court. It's the first time in Pakistan's 72-year history that a military ruler has been tried for treason. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
All right, let's turn back home now and look at how we're looking for the trade setup for the day. Agam Vakil is joining me to tell you all about that, as well as what's happening in the futures and options space. Agam, we hit a lifetime high yesterday on the Nifty. Are we looking at fresh highs today?
Well, possibly so, Alex. And yesterday, well, the market certainly did take everyone by surprise, given the kind of an up move that we saw, closing at life highs. And, well, the SGX Nifty, again, really didn't show anything yesterday, isn't showing anything today either. But to talk to you about the markets and how things panned out yesterday, let's bring that up. We did see 1% up move there, and the Nifty closed at around 12,165, a potential for it to move higher from these levels. Mid-cap and small-cap indices are moving in tandem with the benchmarks, with the banking indices also doing reasonably well. Just a step behind, perhaps, up by as much as 0.5%. How are ADRs doing this morning? Well, we do have gains in Tata Motors, HDFC Bank, Vedanta, all of them advancing. So there is a very good chance that should we see some of these heavyweights advance in today's day of trade, well, the Nifty may very well move further into uncharted territory. But as far as your fund flows are concerned, look at the FI number. While we did see buying day before, yesterday the number was even larger, to the tune of 1,248 crores on a net basis. DIs selling about 908 odd crores worth of shares here. But moving on to, well, your contributors, we do have HDFC, Infosys, HDFC Bank, TCS, all of them advancing and well contributing to the Nifty advancing. But we do have Reliance Industries and HUL weighing down on the indices, but not as much, no more than about 6-7 points in terms of the decline. So yesterday was clearly a day where we did see a lot of gainers. Let's talk about the futures and options space then. And as far as futures are concerned, not too much change in open interest. The Nifty banking futures, however, is the interesting one because we are still seeing unwinding. In fact, one might argue this is about a short covering. What about options and what about the open interest there? 12,000 put as the one which is fairly indicative of the fact that we're likely to see the Nifty stay about 12,100 at least in the near term. What about changes in open interest? Let's bring that up as well. And as you can see, unwinding in the 12,100 call naturally, given we saw the Nifty move above that. And in terms of your wicks, well, again, on expected lines, a decline of 7% and now at 12.5. Is this precariously low for the wicks? That's the question everyone will be asking. But what about the Nifty put call ratio? Has that gone into overbought zone? Not yet, considering we have been used to seeing the markets at around 1.75, 1.8 in terms of the Nifty put call ratio, currently only at 1.67. And finally, moving down to stocks, let's see what we can watch out for. And we do have some gains in Just Dial, NIT Technologies on the back of, the buyback given, and of course Voltas and Vodafone Idea, among many others, which are seeing a lot of traction. And in terms of unwinding stocks, which may see a little bit of decline in open interest, is Grasim, Sun Pharma, and ITC. So, Alex, overall, it was turned out to be a very good day of trade. And there is a very high chance that we may very well see the Nifty move on further higher up in new highs.
Thanks so much for that, Agam. Right, clearly the benchmark is something that you have to watch out for, but let's look at the individual stocks that are in the news and are likely to be buzzing in trade today. Yash Upadhyay is joining me now with the stocks in news. Morning, Yash. What's on your list today?
Morning, Alex. So first up is the telecom stocks, which would be in focus on the back of the TRAI ruling that has said that it would defer the abolition of call termination fee or IUC charges. IUC charges is basically what a carrier has to pay for connecting its users to the network of a rival company. Now, Airtel and Vodafone Idea, they are the net receivers of IUC, while they benefit. Jio is a net payer of IUC charges, which is a negative for Reliance Industries. Credit Suisse said that the deferment of IUC charges was mostly in line, and the other brokerages, they seem to believe that this would be a positive for both Bharti Airtel as well as Vodafone Idea in terms of incremental EBITDA. So do watch out for a positive reaction on both Bharti Airtel as well as Vodafone Idea. And despite of the fact that the markets hit fresh lifetime high in yesterday's day of trade, we saw Reliance not do too much, and probably this was the big overhang on the counter. But that apart, there is positive news as far as the other players are concerned. Firstly, I'll talk about NMDC, where the company has received an extension of almost 20 years for 4 of its mining leases by the Chhattisgarh government. As a DM, they hosted an analyst meet where they have said that they are confident of strong financial growth coming in, led by capacity expansion both in the Gulf Cooperation Council as well as India. Their focus would be on an asset-light business model and improving the company's free cash flows as well as the ROCs, and easing capex cycle should help push growth. in FY21 onwards. Axis Cades Engineering would be in focus as well after the company has been selected as the product development and customer service provider by Airbus for across of its different locations. Negative reaction possibly for Goodyear because the company has said that it would have to close down one of its manufacturing facilities in Haryana from December 21st to December 30 in order to align with the market demand, which has been substantially poor as far as the passenger vehicle space is concerned. And lastly, Bombay Burma is in focus as well after the promoters, Bombay Dyeing, they have acquired an additional 0.5% stake in the company from open market by acquiring close to 4 lakh shares at a price of 1,025 rupees per share.
All right, thanks so much for that, Yash. Now, the Union Finance Minister will be chairing the 38th meeting of the GST Council today. The meet comes at a time when the states have raised the issue of not being compensated for the revenue foregone by them under the new indirect tax regime. The centre, on its part, has already voiced concerns about the shortfall in indirect tax collection. Nikunj Ori gets you all that you need to know ahead of the meeting.
The GST Council in its meeting is going to discuss revamping the GST structure by having a 3-rate GST from currently a 4-rate GST structure. There's also going to be a discussion on increasing GST rates on various items, and there's going to be a presentation made by a committee of officers that was constituted to suggest ways through which GST revenues can be improved. The committee is going to make a representation on the same and also suggest ways through which compliance under the GST regime can be improved. Remember, this committee had sought views from state governments, and the states had suggested increasing compensation cess on various luxury goods, as well as levying GST compensation cess on items that are currently taxed at 18%. There was also suggestion by some of the states that the exemption list under the GST regime should be relooked, and items that are currently exempted from GST like food grains, cereals, etc., GST should be levied on it. Remember, this comes at a time when the GST Council is looking at ways through which revenues can be increased, since the revenues are on a decline and losses to states on account of GST are increasing, which has led to the central government deferring its payment or the compensation that it provides to states for the losses that they incur as the funds are inadequate in the compensation cess fund. Besides this, there's also going to be a discussion on implementing the e-invoicing system, which is going to come into picture in a staggered way from January 1, 2020. Businesses with annual turnover of over 500 crore rupees will be able to implement the e-invoicing system on a voluntary basis, and there's also going to be a discussion on the new GST return filing system that will be implemented from April 1, 2020. Besides this, there's also going to be a discussion on having a single GST rate on both state-run and private operated lotteries. Remember, currently state-run lotteries are taxed at 12%, while private operated lotteries are taxed at 28%. And a group of ministers was constituted to look into this issue, and the group of ministers has suggested having a single GST rate. Now, this rate will be finalized by the GST Council. Besides this, the GST Council will also discuss having a lottery or a reward scheme for customers who upload their GST paid invoices on a dedicated portal, and a draw and will be rewarded through a draw in an attempt to improve compliance under the GST regime.
All right, you'll find all of those details in case you want to read it a little more closely ahead of that meeting on the website BloombergQuint.com. Meanwhile, let's take you to the primary markets where there's a new offer on the horizon. Prince Pipes and Fittings is heading to the primary markets with a 500 crore rupee IPO. Yash Upadhyay is back to tell us a little more about the company, what's on offer and what the company does. Yash, over to you.
Morning, Alex. So, Prince Pipes, as you likely mentioned, is coming out with an IPO starting today, where it opens for subscription, and it is a total offer of almost 500 crore rupees, which will be split into a fresh issue of 250 crores and offer for sale, wherein the promoters of the company, 4 promoters, they will be selling close to around 1.4 crore shares as part of the IPO. That would raise another 250 crore rupees. At the upper end of the price band, which is fixed at 177 to 178, the IPO is valued, the market cap of the company, at close to around 1,958 crore rupees. Now, post the IPO, the shareholding pattern of the promoter would look like this. So it would go down from almost 90% pre-issue to the levels of almost 66%, whereas the public shareholding would increase from close to 10% pre-IPO to almost 34% post the issue. As far as what the objects of the issue is concerned, the company would be utilizing the 250 crore rupees that it would raise via the fresh issue for the purpose of repayment of some of its outstanding loans, as well as the financing of its new manufacturing facility that we are aware that the company is coming up with in Telangana, which has a total capacity of almost 50,000 tons per annum, as well as upgradation of some of its existing equipment at some of the 6 other manufacturing facilities that it has, and for the other general corporate purposes. Moving on, as far as the company's business model is concerned, it sells its products and it is present across the value chain, where it sells its polymer pipes business under 4 different types, as well as 3 different types of polymer fittings, which is the likes of CPVC, UPVC, as well as PPR, which completely covers the entire product range as far as the pipe and fittings business is concerned, much like some of its larger peers in the industry as well. Moving forward, as far as their operations are concerned, they sell their products under 2 brands mainly, which is Prince Piping and Fitting, which is their pipes business, and Trubor, which is their fittings business. Now together, they are widely present across the geography, and they have a wide distribution network of almost 7,000 plus distributors across India, and 257 plus wholesalers as well as retailers present across the geography as far as their business model is concerned.
All right, now also want to talk about, Yash, how this company stacks up against some of its peers. We were speaking to a few analysts yesterday, and they say that they prefer some of those listed peers. What are the numbers looking like?
All right, so taking a look at their financial performance, and over FY16 to over FY18, their revenues have grown at a compounded annual growth rate of almost 13%, which is fairly higher than some of its other peers. So take a look at the likes of Supreme Industries, Phenolics Industries, and Astral Polytechnic. They are all the closest peers to the company, and they have more or less grown in the same range or slightly lower than Prince Pipes and Fittings. Similarly, when it comes to their EBITDA as well as net profit performance, so both in terms of operationally as well as the top line performance has been extremely positive over the last 3-year period, starting FY16 to FY19. As far as the current financial year is concerned, we only have information up to the first quarter of FY20, and there too they have started on a positive note with a strong net profit as well as a top line growth for the first quarter of the year vis-a-vis the first quarter of the previous year. And as you could see, they have done fairly well as compared to some of its peers in terms of both the top line as well as the operational performance is concerned. But going forward and looking at the return ratios and take a look at how the return on equity as well as the return on capital have been close to around 20% plus for Prince Pipes and Fittings, which is more than some of its larger peers like Phenolics as well as Astral Polytechnic. So clearly the return ratios too are extremely favorable for Prince Pipes and Fitting, and valuations is one place where most of the brokerages are also positive. So take a look at the EV to EBITDA as well as the price to earning multiple, and you could see at FY19 price to earnings it is being valued at about 20.3 times versus the likes of Astral Polytechnic, which command a premium of almost 100% to its FY19 P at almost 59 times, as well as Supreme Industries, which is the largest player in the industry, having a market share of almost 11%. Similarly, when it comes to the EV to EBITDA ratio as well, it is fairly priced, and that's the reason why some of the brokerages that have come out with a report on the IPO suggest a subscribe rating on the issue.
Thanks so much for that, Yash. Now, one of the hot topics this week right here in India has been the Citizenship Amendment Act, and it has drawn criticism across the board, with college students across India protesting against it. Now, Union Minister Amit Shah has defended the Citizenship Amendment Act, saying that no minorities need to fear about losing their citizenship, as the act is meant to grant citizenship and not revoke it. Listen in.
अभी हम एक बिल लेकर आए, सिटीजनशिप अमेंडमेंट एक्ट बन गया। इसमें क्या प्रोविजन है? इसमें अफगानिस्तान, बांग्लादेश और पाकिस्तान से जो शरणार्थी आए उनको नागरिकता देने का प्रोविजन है। और पूरा समूचा विपक्ष आज देश की जनता को गुमराह करने पर तुला है। मैंने संसद के अंदर का आज फिर से कहने वाला हूं कि इस देश के किसी भी माइनॉरिटी की व्यक्ति की नागरिकता जाने का सवाल ही नहीं है। ये बिल में किसी की नागरिकता लेने का प्रावधान नहीं है, नागरिकता देने का प्रावधान है। आपको जो राजनीतिक विरोध करना है करो, भारतीय जनता पार्टी की मोदी सरकार फर्म है। इस सभी शरणार्थियों को नागरिकता मिलेगी, वो भारत के नागरिक बनेंगे और सम्मान के साथ दुनिया के अंदर।
All right, let's take a look at some of the stories that you'll find on the website BloombergQuint.com if you were to look up the website as of now. First up, State Bank of India Chairman Rajneesh Kumar on Tuesday said it will take up to 3 years more to list its general insurance arm. The bank will list its asset management company before SBI General Insurance. Nearly all the lenders approved state-run NBCC's bid for JP Infratech, paving the way for completion of apartments of more than 22,000 home buyers. NBCC's resolution won 97.36% of the votes of the Committee of Creditors, according to the results of the e-voting which BloombergQuint has viewed. Home buyers had 57.8% of the vote, and the winning bid needed 66%. That's all you need to know going to trade today, but do stay tuned. There's clearly lots to talk about. You'll find it all on BloombergQuint.